Welcome to TradingView. We're joined here today by Alessio Rustani from leadingtrader.com. How are you today, Alessio?
Thanks very much for having me back. Good. I'm feeling great. Too early in the morning for too much charts and markets.
Oh, it's never too early. You've got to get there when the sun goes up. You're ready to trade. Yeah. Let's have a look at some of the ideas that we've got here from the traders. First one is David Bell FX. And
David Bell, yes. The name rings a bell. No, David actually has got an interesting chart here. He told me yesterday he was going long on the pound. I actually also had placed an order to go long on the British pound, but my order to get filled at a lower level, which you can't see on this chart, but essentially there's a very strong support level, as you're probably aware, at the post-Brexit lows we made. So after Brexit, we saw a flush down in the British pound. We made a low at 128.5, 128, 128.5, I think is what it was. And I was looking for the British pound to come back and retest those post-Brexit lows, but we just didn't get it, which is a bit of a shame. Nonetheless, I did go long on the pound yesterday, just before the FOMC Fed meeting. So I'm currently in a little bit of profit. What about yourself, Zach? Did you make any trades on this?
I did, actually.
Oh, you did?
I bought it at 129.58.
About the same price I probably bought it, yeah.
And I got out at 129... Well, I don't know, 77 or something like that. No, I was just there for like 10 minutes. It was just
like a scalp?
Yeah, it's a scalp. Yes.
Ah, come on, man.
I didn't have time for all this frivolity, you know. But no, it did look, let's say, obvious. I mean, I'm normally only involved when something looks very obvious, and below 130 it looked obvious. Well,
looking at the targets for the British pound, the volume profile, which I think David's quite fond of, and for good reason, seems to point that there's strong volume profile up there at 1.33. My personal targets are about the same level. I think if we get past, Zach, if we get past 131.50, very strong chance we could actually get past through the resistance and move towards potentially the previous range, the previous highs, near 1.34. So that's what I would be looking at.
Okay, let's go on to the next market. US equity index.
Yeah, S&P.
Quantum Logic Trading.
Yeah, Quantum Logic Trading. So he apparently short on hawkish volatility, apparently he's saying. So he at that level is short, I think is what he's saying. Fade short a no hike rally. So he's saying he's fading it. I'm trying to understand what he's trying to say here. So he's looking for a shorting opportunity. Am I correct? At that level, he's pointing out there.
Yeah.
I respectfully disagree with him because if he's saying, actually, no, wait a minute, a rally into 2160, 2180. Okay, fair point. So he's right. There is a gap on that chart. If we could zoom in on that, which we can't, but there's actually a very obvious gap on the S&P, which I talked about, as a matter of fact, last week. There's a chart gap between 2180 and 2169. And I think very likely this rally we saw yesterday on the S&P, on the US markets, very likely we're going to see it move into that gap territory, which means we're likely to fill that gap. So he's right. Any moves into filling that gap could be shorted, potentially at 2180 to 2194.
Okay, let's go on to the next situation, which is WTI long from David Bell again.
I'll be honest, I'll leave this to you, Zach, because I can't figure out really right now what on earth oil is doing. And we are going through a seasonally strong period for crude oil, but the chart to me is not very clear.
Right, well, given that a Winkoffian bottom is a concept which is new to me, I probably have to go on the basis that the market is expecting something from Algiers, some sort of agreement between, actually at the moment, Saudi and Iran. There's talks going on, so it's the talks between these rather desperate oil producers which is putting a floor under oil, and I think on that basis, whatever a Winkoffian exhaustion or a bottom is, one would have to go with the squeeze higher, which I presume that's what David Bell is implying.
Yes, exactly. So we'll see what happens, because we are going, as I said before, it's seasonally September and October are good periods for oil, so that could help it.
Okay, let's have a look at
next chart. Yeah.
Next chart. Right, here we've got
you like this pattern, don't you? You like the head and shoulder.
Well, the only problem with that is that it's actually relatively rare that it works. It's actually something where you have, you have the pattern in place, and you have to sort of job around it and say, well, like here, this knowing the way that euro sterling is so unreliable, that you have this at the moment, then next week it breaks the midpoint of the head, and then you have a failed pattern. But the failed pattern gives you the knowledge, or gives you the courage, let's say, to then go long.
Well, actually, one of the reasons why a lot of these patterns don't work, which I agree with you, is because of the high frequency trading algorithms, which are disrupting a lot of the patterns. We need to be flexible about the patterns and all that. But I think there is a good point to this from the author of this particular chart, PIA first. If we can break, I would say actually my neckline would be much lower, a little bit lower, not too lower. I would say about 80, 83 or 82.5 on the euro pound. If we can break and close below 83, then yes, I'll have more confidence euro pound wants to go lower, and the head and shoulders is confirmed.
Yeah, but the other point there is that the left shoulder there, let's say it's 86 or just over above 86. Yeah. That's becoming as resistance now. Yes. So if it does break above that level, then that pattern would be invalid. Then you would have a different story there. But that's from PIA first, and then finally on dollar CAD trade city.
Right. Well, all I would say is dollar CAD is obviously affected as a commodity currency, affected by the crude oil market, and also affected by the U.S. dollar. We saw weakness coming through in the U.S. dollar after the Fed meeting, so that's affecting the dollar CAD. But we're also seeing strength, a little bit of strength in the crude oil market. As far as the head and shoulder pattern that this person here is pointing out, 4-hour chart, head and shoulder patterns on a 4-hour chart, to my mind, are not necessarily all that indicative, but it looks like we're heading towards a Fibonacci 61.8 retrace. I think that's what he's pointing out there in any case, or some levels. I'll be honest with you, out of all the charts of currencies out there, probably this is my least favorite, because I think there are better setups out there. It's not a setup I particularly want to trade on dollar CAD, but that's just me.
Okay, well, we'll see what happens there, but obviously the temptation is to call it down towards 128. But on that note, Alessio Restani from leadingtrader.com, thank you very much for being with us in TradingView today. We will hopefully see you again next time.